Good morning, everyone. This is a London session on TopstepTV. If you're new here, my name is Deeyana Angelo, aka Market Stalker D. I'm a Series 3 qualified futures trader, and I specialize in some of the more alternative products, such as precious metals and energies markets, and that's what I have here today. I am on quite a lot of meds, so I'm probably going to stay on the combine until I'm kind of sure that my brain is working properly. If you were here yesterday, it was all a bit of a shambles because there was a ton of things happening. We had dogs barking, the scaffolding coming down, so people going in and out. My husband had to take in the car for repair, and he was asking me questions just as I kicked off the stream, so I tried running down the stairs, promptly tripped on a dog toy and tumbled down. So I'm okay. Okay. Just want to say that I do have a slight shoulder dislocation, and that's probably where the cold sweat was coming from. But my ankle is okay. It's very sore. I'm very sore today, so I'm going to stay on a combine, like I said, to make sure that I'm making good, rational trading decisions, something I should have done yesterday as well. Now, overall, yesterday for me was not a great day. Not only did I fall down the stairs along with NASDAQ and Nikkei, but I also managed to hit my daily loss limit of 1.5K. Again, leading to, bad trading decisions and just, chaos. So here's something to take away from that. If you have a chaotic life around you in your home, and you can't quite concentrate on what's in front of you, you probably shouldn't be trading, okay? You need to have that peace, complete focus, otherwise disaster ensues. I actually have a tattoo on my arm that says haste makes waste. And yesterday was a, typical thing. Now, every time we rush through combines or rush through XFAs, the results are not great, right? The results are terrible, in fact, leading to losing accounts in like 3.5 seconds, median average like 3 days of losing your XFA when you're doing that. So I will, use my experience from yesterday to just reiterate how important it is to just slow down, size down, and make sure that you're following your plan. When that's not happening, everything goes out the window very quickly and we lose our way. So no one is completely immune from that. And usually my home life is not that chaotic. We have 8 dogs, but they mostly sleep. We take them out. They're just like, perfect. But yesterday you could hear them barking, going nuts. And obviously my brain was just like somewhere else, obviously. So that led to me tumbling down the stairs. Bit of an extreme thing. But yeah, so I am looking at what's going on with RBOB, which is gasoline futures, and crude oil. They're very correlated, right? So I had this level on crude oil from the daily chart, which is a little speed bump demand. Now, I'm looking at that at a potential continuation for longs. Obviously, we cannot do swings on Topstep, but we can use them for sort of like a directional indicator of what should happen around those levels. Intraday, that does mean that we could have another move back down towards those levels to retest it before it actually turns around. So if I do anything today in my live account, I will be waiting until we dip lower. So today is all about understanding what is happening in the market before getting involved. And if that means that I'm not going to have any live trades before sort of euro close, that's absolutely fine. I prefer to trade RBOB and crude oil for the sort of slightly later NYMEX session. So usually an hour to 2 hours into it, and in and around the euro close, because statistically something happens there with quite a lot of frequency that I like to take advantage of. Anything else that happens during London, it's great, it's fine, but it's kind of an outlier. So, whenever you see a product moving outside of its regular trading hours, that's always like, eyebrows up. It's like, what's going on? And it's been doing that a lot throughout the last year. However, RBOB remains the most sort of liquid throughout the NYMEX session, and especially because it's so gappy, we don't necessarily want to put like big sizes and big positions during the time of day when not a lot of people are trading it. So you can see on the dome, it's very gappy. So we have one contract here, two, gap, then 5, 8, then nothing, then 1, 3, 3. So very prone to slippage and to sort of teleporting price action that goes from one price and then jumps suddenly about 5, 10 ticks to the next available area where they can kind of match your orders with somebody else doing something on the other side, right? That's the whole point of having liquidity in the market. So on some of my other accounts, I do trade, 15, 20 contracts at a time. But, on RBOB, that tends to take a while to fill. So I would typically enter maybe 3, and then another 3, and then maybe another 1, and then another 2 until I'm up to the full size. And that's where sort of scaling into zones can be very useful. But obviously, we don't have to do that on Topstep. And you can just stick to 1 to 3 lots. RBOB is relatively cheap, but because it moves more, technically that's more risk, right? So even though it's $4.20 a tick, it will move like 400 or 500 ticks in a day. Whereas crude oil these days is still stuck at about, well, right now we've come up a little bit to 137 ticks for the NYMEX session. And overall ADR for the entire day is 160. So it's a little bit better, but it's still under those 180 to 200, 220 ideally ticks that I want to see in crude oil. So it's not yet time for me to get super involved in crude oil, because every time I see the moves that it does, I'm just like, oh, really? Okay. Every so often it will do a 200 tick move, but then we're watching paint dry like for a very, very long time. After that, when it gets stuck in a 30 tick range and does absolutely nothing for like 3-4 hours. So we definitely want to trade products that have the movement, and something like OVX above 35 on crude oil has traditionally been a pretty good indicator for myself that we have good day trading conditions. Anything below that, it's a bit sketchy. So volatility indexes is something I do include in my plan as my decision whether we should trade something or not. So I look at platinum as well. Now platinum is a bit different, so it would require about 17 of its own volatility index. And then we have gold, which I think I like using 21. So when it's over 21, that's pretty good. Anything else is a bit choppy. All right, let's see who's in the chat. So do a bit of roll call. Dan Trader, Gigi DeMonaco, Lido, Justino, Mia, T3 Metrics, New News, Anthony has a question, AG, High Volume, Michelle R, Ajaz, Bromby, Wes, Tom Quimby. Right, so I see some names that we see in here all the time. Great to see you here. All right, let's have a look at this question, because I think it's pretty good. Anthony says, when marking the value area for the previous day, should I focus on the session-specific value or the entire day's value? 100% session-specific. We've actually done some statistical tests over it, because we had a trader who was like, oh, the value area doesn't work. And then it turned out that he was using entire 24-hour value. Now, that's an entirely different thing. Like maybe if you want to run swings or something, that could be useful. But the value area should be based from the regular trading hours. Tomorrow, we're going to have the father of... or the godfather of market profile, Jim Dalton. Now, obviously, we've all, whoever's been doing market profile, and if you've ever worked in anywhere close to Chicago, you will know that the market profile is very popular among prop traders for a good reason. It gives you, like, it's not going to give you a buy or sell signal, but it's going to give you a lens into the market. But it's 100% regular trading hours. You know, if you see how every one of us who uses profile, how we calculate our values, it's always to do with regular trading hours. It's never the 24-hour thing. And in fact, I asked Andre from Edgefall to create the TPO by value. You can go on Edgefall, and one of the reasons why this exists. Oops. Okay, so hold on, let me re-log in. There we go. Really? Okay, apparently I forgot my password. Okay, let's... No. Interesting. For some reason, my passwords are not working. So yeah, I'll just talk you through it. I don't know what's happening there. I updated my Chrome, so maybe that's why. But yeah, it seems to have screwed up my passwords. Anyways, so basically when I asked him to do the indicators TPO, time price opportunity by value, he initially put just the 24-hour thing, and the stats made no sense. They were like never touched or never touched. Like it was like such a low probability of the value area doing anything. It didn't matter what you actually had. It was completely useless for intraday purposes. So I reached out again and I said, yeah, we really need the sessions. So, you know, I also need the ability to control the time of the session, because for the London session, I use the shortened hours on these products. Now, on DAX, I do use the entirety of the value, because DAX doesn't really have much increase in volatility across the overlap and into the New York session, which many of these products will have. Now that introduces a problem. So if you have, let's say, a small session like an Asia session or the London session in a product that typically trades a lot during Wall Street hours, that's going to be a problem, because if you want to carry over an intraday swing trade into the overlap and past it into the New York session, what's going to happen is that your stop losses are not going to make much sense. So even if you were in quite some profit, you have that increase in volume and suddenly everything goes nuts. So it all goes pear-shaped and you're like, but I was right on the direction. Why didn't this work? What's happening? It's because you calculated your stop loss based on the London session or the Asia session that is a completely different set of players than the ones that are active during the New York trading hours, during the cash session in equities. So that's something to consider when you are trying to calculate value areas per session. You know, you have to adjust it to whatever the product is telling you. And, you know, when we look at DAX, it never really has that much of an increase. Like, it's pretty much even, with London being the bigger session. So that means if you are, you know, looking at 167 average movement in DAX, and DAX is very smooth, you know, it's like once it makes up its mind, it usually just keeps going. Now that can be a mean reversion trade as well. So it kind of comes up a little bit outside of outside of the initial balance, and then starts to rotate. But once it makes that decision, you know, you see a very, very smooth movement, usually about 70 to 100 ticks in a single direction. And that is something that's happening today. So this is the Frankie fake out, right? We tried to go higher, something that you will see a lot. Just tries to go higher. London opens, it smashes it back down, and then we slowly crawl back up. I do have some levels around 21,500. So I'm looking at about a 30 tick zone, how we're going to behave around here. Now, if we cannot break that with any sort of confidence, I do maybe have some shorts in DAX later today. Not yet, though, because we're still sitting in the initial balance, and there's nothing for me to do yet. Now, I do see that RBOB tried to go higher, and now it's below the initial balance again, and below VWAP, but I still need to see a little bit of weakness in crude oil VWAP as well. we are starting to get that turnaround. Now, one thing that we may want to do here is to see whether we can maybe stay below this whole high. Now, it's a 30-minute chart, so it's a massive chart. But I'm going to use RBOB instead for my trade entry, while keeping in mind what the 30-minute is doing. So let's try, it's a combine, so a little bit bigger sizing. So let's try 3 lots with a disaster stop of about 85 ticks. Now, whether we can adjust that later, we'll see. But you can see that the structure, even on a 100-tick chart, tells me that the nearest high is, you know, about 70, 80 ticks away. So I want to place my stop a little bit away from that, so that it's not completely smashed through if they try to do a liquidity grab, which I think they just did on this run up. And now we just need some follow through down to some more relevant areas that correspond to crude oil. So for example, I have on the intraday side, I do have the London average session range low around 205 on RBOB. And corresponding that in crude oil, it's around 72.75. Now, when I look at the options levels, we do have GEX5 there, but also GEX2 at 73. So that could be, you know, a little bit of a stopping point before any kind of further decision making. But yeah, if we're going to run any shorts, that would be the logical step if we manage to stay below this GEX3 level around 73.50 in crude oil. So I'm using that as my guide for this momentum trade down, because it is momentum trade down since we exited the initial balance. So in effect, it's an initial balance breakout trade, right? And now we just wait. So I'm going to tackle some questions while we wait. Do the gold, please. I penned short and I'm freaking out. Yeah, so gold has been a tricky one for me yesterday. So I popped into at the buzzer at the end of the night and I said, gold was mean to me today. Because it was, you know, it was very difficult to read. And however I tried to, it was one of those times when, you know, you see where the supplies are, you see where the demands are. And, you know, I was on a lot of meds as well, and I was in a lot of pain and stuff, so I kind of tried trades. But it turned out when I did a review, like just before I came on, it was basically I was buying tops and selling bottoms. So it was one of those days for me. But yeah, we can try doing gold, but I think I'm going to be leaving gold alone for the time being. I do think that the volatility in gold has fallen down quite significantly. So let's actually change this one. So yeah, it leads to some very suspicious trading by the market makers, where it just kind of wags up and down in these massive ranges, and that's never really what you want to do. So let me just clean up this chart because there's some old levels there. I mean, I can see a distribution on a 3-hour chart, you know, sorry, accumulation, not distribution. And I mean, to me, this looks like it's just going to pop higher. So if you're in a short, this is not what I would want to see. One thing that may happen here is perhaps, you know, that could save the trade, is a liquidity grab to average session range high, which is, I mean, it's not close, it's 27.52.7, but entirely within the wiki ability of gold. Furthermore, we are above overnight Globex VWAP. We have just built some volume above above the developing POC, even on a 100-tick chart. I mean, to me, this is all just longs. It's not shorts. So if you've opened a short, don't freak out. Just kill it early. Like, you know, reassess. I don't, you know, I don't want people to kind of enter a trade and then just wait until it completely smashes their account. Because you need to have something called the situational awareness. And if everything else that you have, you say you're freaking out, what does that tell you? It tells you it's not a comfortable trade. You either got the timing of it wrong or the trade location of it wrong, or both. you know? So the only thing that, like I said, could say that if they have a little bit of a liquidity grab and they decide they run out of steam. But let me drag out some options levels for you as well, so that we could do that. However, anytime you start freaking out, you know, your brain is telling you something. It's telling you it's not a good trade. So why are you still in it? You know, you can always get back in, like maybe even at a better location. But, you know, staying in trades that are not doing... Do you have an early exit point? Like, for example, I like to use my maximum adverse excursion and then plus like about 4 ticks, depending on the product, obviously. But usually if I'm on gold, I would be entering on like a 50 tick stop, and then at around about 32 ticks, I would be like, that's not doing well. So you need to have that early sort of decision-making point where your trade has gone into so much drawdown that it's just no longer valid. Like that's too much of a drawdown in order for the structure to be respected. So try to develop something like that in your approach, and it will help you from, you know, freaking out, because we don't want to be freaking out. You don't really see me freaking out, whatever happens to the trade. You know, I'm never like, oh, what's going on? I always have the argument for both sides. Now, whether I'm able to get in on the next developing trade, that's an entirely different issue. However, anytime that you're freaking out, yeah, so I can see, you see, gold likes to round numbers. So I can see like calls are located in a gamma wall is located at 2750. So yeah, it's very likely that they're going to wake up there. And usually those areas, 2750, where the calls are located, tends to be a better option to look for shorts. Now, yesterday we actually had gold just smashing through the calls. That's why, you know, initially I was looking for shorts. And then when we went way past that, I went into a long. And then it just all went, you know, the other way when COMEX went, which is an expected move. Like, you know, I was so in pain and just not really thinking right. I know that happens, you see. I know that's like one of my strategies. But yesterday, because of all the stuff that was happening, I just wasn't able to marry my actual plan and what I know is happening statistically nearly every single day to what I was seeing, you know. But I don't freak out. I just go, okay, well, that's happening now. I even said to myself when it started turning, I was like, this is probably going to go all the way down. And I did nothing about it. So, you know, we have to be healthy. We have to be, you know, present, and we have to keep doing. This is a very difficult job. You know, this is kind of like, you know, we're detectives trying to work out what's going on in the markets. And if you're not fully present, if your focus is diluted into like 5 million things, or if you don't have a solid strategy for early exits that is systematic, so that your emotions won't take over at times when the trade is not doing right. Because let's face it, when a trade works out, there's not that much to learn from it, right? It's like, great, I had a level, it worked, end of story, you know, cool story, bro. But when you have a trade that you kick off, then it draws down like 10, 20 ticks, and you're like, oh shit. Now what? And that's when your brain starts to fight, because it's like, I need to save myself. Here's a little thing for you to know about our interesting little brains. We don't have, like, our primal primitive brain, which is where the emotions come from. We don't have the ability to discern between losing some cash or being in an uncomfortable trade versus the actual death threat from, you know, a lion, serial killer, you know, or anything like that. Your brain thinks uncomfortable trade, serial killer, same thing, right? It's the most bizarre thing in the world, but it is how our brains work. Once you become aware of that, you're like, okay, this is just my brain going a bit crazy. You're able to rationalize things, and you should be able to get your prefrontal cortex to engage, which is where your rational part of you is located, okay? So exercise helps with that. If you're able to do weightlifting during an uncomfortable trade, and I mean ideally before as well, But usually when you start getting emotions, you say you're freaking out, that's an emotion, right? Now you might think, oh, it's just uncomfortable. No, it's an emotion. Like, I know men and stuff, men are all like, yeah, we're not emotional. It's the women that are emotional. But actually women are more in touch with our emotional side, and that actually works well for us in trading, whereas men just try to pitch it to situation, whatever, we'll deal with it, and then they try to go into offensive mode, but you can't do that with trading. In trading, you always have to be on the defensive side of things. So without sort of systematic things put in place for nearly every scenario, you are going to get yourself into trouble and into an area where your brain will read as an uncomfortable situation and as a potential death threat. So you want to avoid that by doing things like, okay, let's look at data. What did my most successful trades do? Let's have a look at maximum adverse excursion. Now, I know that Topstep X doesn't yet have that. I do believe, we're working to try and get it in there. So I'm trying my best to get the MAE and MFE as a part of Topstep's tracking analytics, but I'm not sure that they maybe not planning to put it into the analytics. I don't know, but I've requested it, so we'll see what happens there. It will be a very useful measure because you can look at your MAE on your winning trades. So what's that? When you enter a trade, how much does that trade draw down against you for the duration of the trade life? Now, I personally like to track this manually just from the entry because I don't really care what happens once I'm in profit, whether it wags up or down. I just want to see it reach the target, right? And very frequently, if you're in longer term trades, like if you're holding a trade for 3, 4, 5, 6 hours, you are going to have those wiggles back in the other direction. But if you're only looking for the maximum adverse excursion from your entry, it has to be like a manual entry on a TradeZella or EdgeWonk or whatever you're using, because it can pinpoint how of a good quality your entries are and whether you're constantly experiencing some sort of a drawdown upon the entry and how deep of a drawdown on average. That is a piece of data that we can actually use in our trading, and that can give you the early exit point, or what I like to do if I'm in with like multiple positions. So let's go back to that RBOB for a second. Like my MAE on on this one on RBOB is about 60% in, so that would mean somewhere around just let's say to 0688. So what I would do sometimes to control my downside, even if I don't fully want to exit the position, I sometimes will put in a partial stop, right? So the partial stop in this case would be a stop buy. So even if it goes there, it's going to take me out by like 1 or 2 contracts, leaving something on the table just in case that it still turns around. But for the most part, if it drags all the way down to that area, I'm probably going to kill that and then try again. But it does depend on the size that I'm trading with. Obviously, if I'm just in with one, you can't do that, right? So, and RBOB doesn't have micros. So, there are ways to control the downside using that MAE, but if you're only trading with, smaller sizes and stuff, you can just use the MAE point to kill your trade early, right? And now the question is, well, why don't you just place your original stop at your MAE? Because I've observed that sometimes it will reach my MAE and then it will turn around and go into profit anyway. So I want to make sure that I stay in. And, by now I know that my entries and my setups, I know when I've done a good entry and I know when I've done a crappy entry. So because of that, I will keep the MAE in mind as a potential early exit, especially considering what precedes it and where that event is happening. So let's say that we had a reaction from the London value. But I decided to enter very late, sort of somewhere around 250.84, because that's where we were. And then suddenly we start dragging back all the way to value to retest the important area. And I'm sitting at like minus 60 ticks in our bob. It's uncomfortable, but at the same time, I'll be like, okay, that was a terrible entry. I'm going to kill this, and then I'm going to try and get closer to my original area, right? This is all coping mechanisms and coping strategies for when the market maybe moves into a momentum trade, but then fails to continue the momentum. So this is where data can come in to give you that additional confluence and, the better way of doing things without freaking out. So you don't want to freak out. You want to have, even a losing trade is a data point. It's not a losing trade. It's not a death threat, right? It's a data point. You've got something to learn from it. It's like, what happened in gold? What did you miss? Well, you missed that there are calls at 27.50 and you're missing the accumulation. I said that like a real Eastern European accumulation. Accumulation on the larger time frame. So if I go, I know we don't have 3 hours here, but even if I go, let's clean this up a bit. This is all yesterday's levels, as we know how that worked out. So today, core resistance in gamma wall is 27.50, right? And it's getting there. But one of the reasons why I'm not that sure this is going to be working out, here, let me do something else here with this measured thing, is because we are over VWAP. We held the low that was made yesterday, and now we are accumulating. This is like your basic Wyckoff analysis. I call them stage 1, 2, 3, and 4 because I can't be bothered with accumulation, distribution. I know what they are, but I don't know. For me, it's just stage 1 and 3 is what you need to pay attention to, where it goes into a flat sideways movement. Statistically, about 70% of the time on a larger time frame, so I'm not talking about 1 minute and 5 minutes, those tend to have a lot more noise and a lot more reaccumulations and redistributions that put a wrench in the works. But if you're in a 4-hour chart and you see this in a pop, that's an accumulation. Furthermore, like I said, we're above VWAP. We have calls at 27.50. We have algorithmic projected ranges higher, all the way up. So it's like, everything about this to me today is telling me, until we're at 27.50, don't even try shorts. So I don't know where you entered, but obviously your trade is in a drawdown. So try to take a larger time frame analysis, just a simple, tops, bottoms, accumulations, distributions. So stage 1, stage 3, sideways action very rarely brings further downside. So let's have a look at that in history as well a little bit. Here it is again. Accumulates overnight, pops, test, pop back up. So this is a whole thing, one big accumulation. Distributes here, falls down. Then a big pop. This was probably during COMEX. Yeah, so that's my 3 p.m. That's 9 a.m. Central. Again, post NY cut reversal is what I refer to these at. Into the euro close, you get that big pop. Here's another distribution that's very messy because we went higher. Selling wicks, bearish engulfing, resolution to the downside. But yeah, Wyckoff, right? Phase 3, phase 1, phase 1, phase 3, phase 3, phase 1. We have to learn basic market structures that are very useful for like ballpark directional movement. It's like, it's distributing. Where is it most likely to go? Up. Distribution, phase 3, into a liquidation, right? So it goes up, distributes, goes down, accumulates, goes up. It happens in an uptrend or a downtrend. It's like, it doesn't matter whether we're, fierce uptrend, fierce downtrend. If it distributes or accumulates, that's a change in market sentiment, especially if you're looking at a 4-hour chart. So maybe try to do a basic market structure analysis next time. So that's something that we can learn. So MAE for your drawdowns and basic market structures on a 4-hour chart. See whether that helps. Let's have a look at more questions. Big Smoke Ridge, okay. What have you been smoking today? That's my question. What indicator is that blue and yellow sidebars? This is the volume profile visible range. What it does, it will change as you drag around the stuff, but it basically gives me ballpark point of control and whether we're building volumes or not. So we can maybe use a 2-minute chart to illustrate this better. So for example, right now, another thing that I can see is that we've built up a lot of volume in this area. And when you reach an area, like here's a very small time frame where the distributions are very messy and they don't work the same way as the 4-hour chart. A chart is a chart, but unfortunately it's one of those things where the more trading information you have, the more relevant the patterns are. And when we're on such small time frames, we need additional confluences, and that is what the visible range profile does for me. So this is not time-based. It's just a visible range. Like I said, as you start to move it, it's going to start to move the information. In effect, kind of giving you a little backtest mode, which is like pretty cool to see how it all happens. And you can see at this point of reversal on GC, we also had the same thing. So we built up the volume profile, we have the POC here, and then we went higher. That indicated a reversal. Now, how does a redistribution look like when we're going to go higher? Something like this. We built the point of control higher up, and then the price cannot go down, and we keep building more and more volume. Eventually, if we cannot break the point of control and stay below it, that spells that the volume POC has moved to a higher place. That's a bad thing for shorts. We want to see it moving lower, not higher. So yeah, you're effectively looking at more signs that this is still bullish and still going higher. Okay, but that's what it is. All you're looking for is volume nodes. So sometimes this will be a lot more gappy. So you could probably see that maybe on crude oil. Yeah, so here we have a high volume node. So like it's a pretty wide one with a little bit of gap down here. And then you have a low volume area all the way up. So if we start to go higher from here on crude oil, this is either going to go it's going to do it fast through the low volume areas, but it may reverse from it very quickly as well. So it doesn't give you the direction that the market will take, but it gives you the speed and velocity that that event will happen, how that event will happen. So that is another little way of looking at supplies and demands. So if I look at this 30-minute chart, I can see there's a supply here, which the volume profile also tells you. And then what this indicates is this was a very, very fast event. So it's not a true supply. I wouldn't, even though it's technically a supply that has some volume in it, but on the run to it, I would say that this is like, a very quick reversal into something. And you can see there's another older supply. Now, when we move it, we see that there is volume there because we've been there before. But once we touch it, I like to just keep it on the current events and then see whether this bearish engulfing happened pretty quickly on a thin volume. And that tends to mean, well, we ran out of volume as we hit supply. So coupled with the bearish engulfing, that's a nice reversal, right? All right, so yeah, this gold is just continuing to creep higher, unsurprisingly. A slight development here on crude oil where we did go overnight VWAP, but we have this supply here, so see what's going on. See, one of the tough things about this particular area, everything's so thick, but it has a staircase formation on the 30-minute charts. It's like one supply tries to pop in, another supply tries to pop in. Are we going to get a sell-off again? So I'm actually willing to stick with this for a little while longer. If it rotates all the way through IB, that's fine. in that case, I'll just leave it alone until much, much later. But like I said, the main setups that I have in crude oil are not really at this time of day. In fact, if I had DAX, I wouldn't really look at anything else, but we don't. So yeah, and that brings me to the Eurex posts neatly. So let's upvote Eurex, please. Tell everybody. That's Eurex. You have to be on Topstep. Yeah, have to be on Topstep. Roy, can we just exit? Yeah, fancy wins doesn't make you money. Okay, yeah, you're out of here, man. 24 hours first. If you continue to do that, you will be out of here forever. Okay. Yeah, Dee mainly trades crude oil. Like, I don't have the products that I normally trade on Topstep. I've asked them for 10 months, 11 months. They still don't have it. And one of the premises of the London session was that we're going to get DAX. That still hasn't happened. Okay. So it's been pretty difficult to actually find things that will work for the London session because nothing really moves. Like, these products, they can't move through Asia and then they just stop. And on most days, you're not going to get that movement. So it's one of those things that when you're trading a product outside of its normal thing, that's what you're going to get. I mean, look at the price action. It's not really going anywhere. So you tell me. You tell me, Roy. Like, you can't because I've just banned you for a day. But you tell me, what direction do you think this is going? Do you want to buy it? No. Do you want to sell it? You know, I want to sell it because this looks like a reversal and a potential move back down. This is just a product of a 3-lot position. So you're like freaking out. It's like, oh yeah, Dee just losing. Yeah, Dee ends up most days up at the end of the day. Like, me hitting the daily loss limit is a very rare occurrence. And most of the days I am up on the day, so by the end of the day. But obviously I can't show you my DAX trades because that's not on Topstep, it's on my own account. And that's not what we're here for, right? So once we get DAX, we can trade DAX, but until such time, we have to trade products that are not moving as much, you know? In this entirety of while I've been talking, we've stayed in, let's see, on crude oil, we've stayed in a 33 tick range, okay? 33 ticks, that's what we're working with. So yeah. And Roy, if you don't like it, don't watch it. There's always that. You know, why do you have to get up and start bashing on people? And look, I'm in a lot of pain today, so I have a very low tolerance for bullshit today, okay? So let's just put that out there. If you don't like the London session, don't watch it, mate. It's always the option. Don't turn into a keyboard warrior and start doing stupid things that make you look very petty, pathetic, and like one of those guys who just comes on the internet and decides to start bashing people that you don't know. So, you know, think before you act next time. Any idea how to use the volume profile? I've just explained that. So you're looking for where the point of control is. You're looking for where the low volume nodes versus high volume nodes are. And you're expecting either reversals or quick moves through the low volume areas, but you're expecting slowdowns at the higher volume areas. And, you know, you can even look at supply and demands, looking at that. So, yeah. Anyway, yeah, what happened? Yeah, there was a guy named Roy in here. He was being, someone who is not very nice. But here's the thing. I've had my live account for over a year. Where's yours? You know? But hey. So Farm Boy CG says, Dee, the POC here is quite different than the POC from a TPO market profile level. Yeah, completely different. There are two different measures. So TPO POC is taken from a 30-minute chart, and it will be usually nowhere near the volume profile POC. That's why it's a good thing. You don't want two indicators to tell you the same thing. Now, if you were to use the fixed volume profile, that will, and you use the regular trading hours, the POC will be very, very similar, right? It will be like within a couple of ticks, if not at the same area, because it's going to be reading a similar type of information. Ultimately, price is the result of the price is a result of volume, right? So if you don't have a lot of volume, you're not going to have a lot of price movement most times. This is why you see zombie rallies. Like it's moving up, but it's moving up in like slow increments and wicks and stuff. So it gets very difficult to actually do anything with it. I'm just going to go back to RBOB to have a look at it. And I want a 30-minute chart here. All right, so my MAE point is still doing its thing. So the MAE that I was talking about, the price drawing all the way down to ballpark MAE level, and then reversing. So right now that's happening. I'm still looking at GEX3 here on crude oil, but we do need to see some weakness below the VWAP as well. So this is still absolutely fine, and I'm only 37 ticks in drawdown, which is nothing on RBOB. And yeah, like I said, the result of this unrealized P&L is just because I'm in with 3 lots rather than 1. So, you know, if I was in with 1, this would be like barely 150 ticks. But obviously people freak out when they're like, yeah, no, you're drawdown. The trade is still valid. So, you know, until we sort of committedly move into this supply on crude oil, this is still a short for me today. For the London session, everything will change once we get into NYMEX, because we have different levels, different styles of trading, different goals, and we will see a more committed movement either side. Now, depending on how long this trade takes, it is a combine, but I may just let it play out. Because it is a combine, there is nothing, no risk involved there. So for me anyway. So yeah, I might just, let it do whatever it's doing. Paul says, do you fancy having a party when we get DAX? Yeah, so we can all be hungover and try to trade DAX. Yeah, so that would be nice. I'm kind of losing the the sense to live at this point, whether we're going to get DAX at all. I mean, they keep saying, yeah, we're working on it. So I'm hoping that they are working on it. But, it has been like 10, 11 months now. So I don't know. Maybe we should have a party. We should certainly have some sort of a special event. Maybe I'll do a live stream on my channel. Kickstart that in Q2. DAX arrived. Let's do it. Raven Nos. Good morning, all from Texas. Good morning. Very good. Stefan D says, anyone that takes the time to explain trading to us idiots, don't call yourself an idiot. That's negative self-talk. But it would be fun to see Dee trade DAX one day. Yeah, I mean, I'm in the process of moving house now. We've definitely sold this place. Well, if we can get through the surveys, obviously. But I'm actually moving to the countryside at some point in the next 2 months. Once we're there, I should have a better idea of how to manage my time. And I will probably be able to restart my live streams. I've been trying to sort out our life and stuff, and everything has been very, very hectic with all the house viewings, and you can't be here when the house viewings are happening, and we have 8 dogs, and the house viewings were like multiple times a day, and it was just very, very disruptive. So that's all hopefully over and done with. So we'll see. Why in a combine and trade any size, you go red and take heat, then acts as resistance until you take a loss. I'm in a combine because I took a tumble down the stairs yesterday. I have a slightly dislocated shoulder, and I'm on a lot of pain meds and a very twisted sprained ankle. So when I'm on a lot of pain meds, I don't like trading my accounts that matter. Very simple. So I'm in a combine to illustrate whatever I'm trying to illustrate. And in this case, it was the MAE that we were talking about. and just to have something to visualize the idea that I might have for a particular trade. So, yeah. Yeah, so why in trade any size you go red and take heat, then it acts as resistance. Yeah, it's because I work off larger time frame areas. So I don't work from like, very tiny whatever, so I don't use 1 minute charts, 2 minute charts. I use 15 and 30 minutes. So this is why I allow a disaster stop. So I want my trade to breathe. Remember, I'm not a scalper. So I look for moves that will bring me from 150 to 200 ticks, maybe 70 if we're talking something that doesn't move that much, like platinum or something. But generally, I look for bigger chunks of the move. If I was on a 2 minute chart and I didn't let my trade breathe, I would never be in a trade long enough to get my big D-style trades. And for some people, this is an uncomfortable thing to do. But remember that when I'm trading with more size, like, I've traded for 18, 19 years now. I mean, it's a very long time. And usually when I'm trading with multiple positions that go into 20, 40, 60, 80 lots, I will kick off a trade in one spot. Then, okay, well, we're in a combine. We can actually do that. Then I will kick off another lot of trades in another spot, which will make my average price better while keeping my initial disaster stop at 85. And then as it kind of does its thing inside a zone, I'm able to reduce that. So that is the whole idea of using the zone and a disaster stop. But for the most part, I decided that might be a little bit too complex. So I'm generally just trading 1 and 2 lots on most of these accounts. But this is a combine. So it, I can illustrate that without putting any crazy risk on the side. Maybe I can illustrate that in micros next time. So that might be more appropriate for most people. Because, when you're trading with a lot of size, like that is not very, like it's great TV, but, and I have videos of me making 24 grand in like 30 minutes, but it's just not something that is very realistic for most people, right? So it's like, I just feel it's like an unnecessary flex. And I don't like doing that. So process is more important over any amount of cash that you're making. And yeah, so for example, this is where I will use lower time frames. So the first one always goes based on the larger time frame structure. And then you're looking for zones inside the zone, so to speak, to basically do what you want it to do. Now here we have a little supply. And we have a little reaction there on a 15-minute chart. So is that going to continue? I don't know. Nobody knows. You go down to a 5-minute chart. You can see there's a zone here. So really now there is a potential for them to actually take some liquidity here. Depends on what crude oil does. Or to use this area for an actual bounce lower. What I want to see here is that we go below the POC. This is a 5-minute chart. So again, it might take a while to happen. And then 2-minute charts. Well, 2-minute chart is very messy on our Bob, so it's not very useful. So I'm not going to go down to that. But if I get another reversal, I can technically enter again and average my positions to basically have a smaller stop, bigger size, and a committed price action. But until it's going against me, like this, there's nothing to do. Only when the next signal comes around, so in the next sort of 5, 10, 15 minutes, I can make a decision on whether I want to add more. If I don't want to add more because it's like not doing what it needs to be done, and if I'm not talking, if I'm not on live streams, I may just kill the trade and call it a day, right? I'm like, okay, well, that one didn't work. And then I typically leave about 3-4 hours before I come back to look for another trade. So I won't be, quick draw McGraw, one trade doesn't work. I enter again, and I enter again, and I enter again, and boom, daily loss limit. I have days like that are very rare. Typically, I hit my daily loss limit probably like once a month. But generally, it's not something that I do very frequently. So, So yeah, we'll see what happens. But actually maybe crude oil is looking better for this because there's always a bit of a difference between these two. One is always weaker than the other one. And right now it seems to be that crude oil is a slightly weaker one. But I don't like the fact that it's hanging above VWAP and GEX. So I still would like to leave it alone and to see what happens there. I closed down my bookmap because my computer was playing up, and I can't be dealing with tech issues today because I'm just not in the mood with everything else going on. So I can't really see what they're doing with the bid and ask and with the bubbles and stuff. I would also like to see, actually, if anybody has got cumulative delta on crude oil, can you tell me what that is? This Switch chat is pretty good. Johnny says, what's the best time to trade Nikkei? And he says London time. Midnight. London midnight. So from London midnight, if I'm going to trade Nikkei, typically I do a Nikkei trade on FOMC rate decision weeks. So usually a day after. So once the rate decision is done, that midnight, I will look for a swing setup. So that is something I do every couple of months or so. So yeah. How can you tell the difference between accumulation and a consolidation pattern? Okay, that's a great question, actually. Basically, when you're looking at price action patterns, consolidation is usually about 4 or 5 candles, right? So it's a very uniform formation. Usually, the candles look more like soldiers. They're like, soldiers, blah, blah, blah. Let me actually try to find, maybe crude oil might be a good one for that. Because it does have a fair, okay, here we go. We had one yesterday, actually. Here's a consolidation. And yes, it's an accumulation as well. But, there is a reason why I call, accumulation over consolidation. Because when you have a consolidation, look at the uniformity of the candles, of the candle bodies. So there's 1, there's 2, there's 3. They're fairly similar in size, and then the consolidation typically resolves to one side or the other. Whether that's up or down, that's another matter, but generally it is very good to look for the bullish or bearish engulfing finisher as a way of exiting the equilibrium that we had, because this is some kind of a price agreement, right? When you exit from there, you have a setup. So in effect, you can choose to do a Dolby style trading whilst it's accumulating, if you can, maybe pair up the time of day or something with it. But once it breaks out, that's more of a Dakota style sort of reversal trade. And then you just fish for VWAP or something nearby as a potential close target, as a little breakout trade back the other way. But an accumulation, let me think. So accumulation, maybe in gold. So let's have a look at gold. And let's maybe go up to a slightly higher time frame. Okay, so here is a form of the distribution that really was a redistribution and it failed. And it went higher because this was probably overnight. Yeah, so basically what happened here, this is your distribution phase, right? So it's the same as accumulation, except we're kind of looking for shorts out of the distribution at the right time of day. Look how messy this is. So wicks, and it lasts so much longer as well. So the other one was on a 30-minute chart, lasted for what, 4 candles? This one is like 1, 2, 3, 4, 5, 6, 7. It's like 8 hours of just doing nothing, right? It's like it's consolidating, but is it consolidating? No, it's actually just wagging around wicks all over the place and stuff. So that would be more of a distribution to me. Now, one thing to note, that if you're in a lower time frame, what's going to happen is that you're going to get these random walk parts of the day. Now, what is that? That's not a true consolidation or a true accumulation. It's just lack of activity, and it's just algorithms pinging it back and down without any kind of purpose. And that's why I don't like trading some of the instruments out of hours, right? Ideally, I want to trade my instruments for their time of day, which is why that question, when is a good time for Nikkei? Tokyo. That's its main session. So why would we, watch paint dry during London? And I tried, I tried finding an alternative for London. So I'm like, oh, maybe Nikkei will be fine. It was so dead that, it looked like the market has been closed, and it wasn't. There was no movement. It was like 1 tick per hour. It's like, great. Now, obviously, gold and crude oil are not that dead for London, but it's just the movement that we get is quite a bit more erratic, and it just doesn't offer much juice on most days. So, for example, right now, we're barely touching that gamma wall on gold, right? The one that I was talking about. And it's like, whoopee, 50 ticks of movement on gold. It's enough to make anybody go insane, right? So it's like you're looking at watching paint dry. Now, obviously, if you shorted it down here somewhere, that's not a great thing. That would be very, very tricky. All right, so we're getting a little bit of movement here, but what I want to see on RBOB is that we go below this POC. Maybe we can add another couple of trades, another couple of lots here, just to illustrate how, you would scale into a zone without piling into positions like a lunatic. So now we're getting that committed movement down. I'm going to move this chart over here back to crude oil. All right, so crude oil does have a continuation down. So let's add, maybe a couple more here. So what am I on? And that will be a, pretty decent sort of 7-lot position. Here we go. So let's see whether we get follow through. So now, look at that. My stop loss is actually 66 ticks because I used the disaster stop as a zone to position myself, right? So now the only thing we need is momentum down. Or that's it. So this would be, the time to trade when there's high volume because you get everything that you need and then you're just looking for a smash down. What's happening in crude oil? I mean, it's still quiet. Again, this is out of our session. Usually if you are in NYMEX and you get some sort of a breakout, they will definitely push it, but we may have to wait for that a little bit. But yeah, that's how you would minimize your stop. Go up. Now, look, this is a 7-lot position, right? I don't advise you trading 7 lots in combines. No, absolutely not. Because if it goes wrong, you're going to lose the combine like in 3.5 seconds. However, if you know what you're doing and if you want to try scaling in like this, do it on micros. Do it with like 1 micro at a time. So give yourself a disaster stop that has to still be based on some kind of volatility of the market, rather than just, I'm going to use a 5-tick stop or I'm going to use a 100-tick stop. That is like completely nonsense, right? Complete nonsense. What you want is to have a measured something for your stop loss sizes. I have a way of determining my stop loss sizes by doing like average session ranges and then dividing it by a certain number. Coach Paul uses 2 ATRs I think he uses a 5-minute chart, but I'm not sure. Don't quote me on that. You can ask him. But whoever's been doing this for a while, we all have a certain style of finding the sizes of stop losses that we effectively determined based on the current volatility of the product. Now, there are diminishing returns there because if you trade something that doesn't move, the sizes of 30-minute candles are still going to be pretty massive. And a lot of the times, the challenge that comes with trading something that doesn't move is that the entire day's range is going to be done in 30 minutes. And now what? Where does your stop go? I don't know, right? So having a way to determine the initial stop loss is one thing, but then you're effectively aiming for that drawdown, the MAE that I was talking about, to actually come true on most trades and to give you an opportunity. So you're effectively anticipating the drawdown as a way to take advantage of well, let's say your weakness. But then if a trade ends up working out, because MAE is measured on winning trades, not on losing trades, because MAE on a losing trade is your stop loss. Like, there's no real thing to measure from that. But, even on this trade, what you're seeing here is just data playing out. I know that 60% of the drawdown is very possible by RBOB trades. And when I'm trading with a bit of size, I will use those points to scale in and then to minimize the stop by improving my average price. I'm not hugely in favor of adding into winning positions unless you start the opposite way. So you start with a small stop and then you work up to your sort of default stop size. Does that make sense? So I'm doing it the opposite way. I'm effectively taking disaster stop and then using the drawdown to scale in, right? To get the better average. But I suppose you could do it the other way. Hold on, let me clear my throat. Yeah, I'm definitely like a little bit loopy from the meds. I just tried to drink from my Celsius thing and I didn't see where the hole was, so I tried to drink from the wrong side. Okay, definitely no live trading for me today, guys. This is like not good. If you can't even drink out of your tin properly, you probably shouldn't be in charge of money that day. Okay, so Ajaz says CBD is green, 168 on CL. Okay, so that's not a terribly big cumulative delta. If it was like, plus 800, plus 1,000, I would be like, oh yeah, let's bail you. But yeah, that can actually turn pretty quickly negative. But yeah, minor positive delta is okay. Thank you, Ajaz. I appreciate that. Payment still not working to upgrade XFA. Sad times. Yeah, I saw that when I was buying this one, actually, because it didn't have an active combine. I use my PayPal. Aja says, are you finally coming over to Surrey? Yes, I'm coming to Cranley. So maybe we can go for coffee or something. I mean, Surrey is massive, so I don't know which part you're at. I know you're there. But yes, I'm finally making a move. So if you're in and around somewhere, within sort of 30 minutes or so, we can meet for coffee. That would be awesome. I would love to do that. Yeah, Ajaz is one of my market stalkers, by the way. So we worked together, a few years ago now. 4 or 5 years. Lockdowns. It was lockdowns, wasn't it? Yeah. All right. Yeah, Paul says, haha, 3.5 seconds actually did that once. I think we've all done it. We've all had moments. Especially people who trade NQ. They're like, let's open a combine. Whoosh. It's like, ouch. Okay. 150 quid, $150 down the drain. Just throw them out the window, shall we? What's the name of the volume indicator in the middle of the screen? That's just volume. Like literally just volume. You just go volume. There it is, volume. Literally just plain old volume. Nothing fancy, nothing special. Charles Joy says, I think the combines are rigged. They're not rigged, mate. Like, come on. Maybe if you go to other suspicious companies that do rug pulls, but Topstep has been around for 14 years. I've done combines and been funded with them like multiple times over the last 10 years. Well, not multiple times, about 3 times. With this last one, obviously, over the entire year. Oops, what's happening here? Let me get out of my Ninja Trader because it's doing something odd. Okay. Losing connections. Okay, maybe my internet is going to be a bit more stable now that I don't have a million things open, because usually I've got like about 4 different platforms open. So yeah, the combines are not rigged. If you cannot pass them, you're doing something wrong. So we can talk about that. Clearly, there are those of us who have passed them. I've had multiple XFAs that got transferred to live. It's like, I don't see why people are like, oh, it's rigged. The only reason to think that they are rigged is if you're sizing up too much, if you're over trading, or if you're not really trading with the mindfulness, the slippage will happen, because they try to simulate the slippage in the combines as well. It doesn't mean that it's going to be exactly the same as live, because obviously there's some order matching, but if anything, the combines are more favorable because you'll never have fill problems. You will click a button and it enters the position. Like if I wanted a 50 lot in RBOB, if they allowed us to do that size, on a sim account in a combine, it will fill you immediately. Do you think that's going to happen if you have like 1, 5, 2 contracts, 3 contracts in the actual live market? Hell no. It's not going to happen. You will click the button. You can get 2 results. 1, unable to fill if you have it set to fill or kill. So fill everything or nothing. Then you can set it to a partial fill. So fill whatever contract is there and then do, see what happens. And then keep clicking buttons until you're in with your full default size, or just accept a partial fill, which is, a can of worms in itself, because you're effectively not using a default position size. You're constantly messing around with one of the variables. And, trading is kind of like coding. You have to look at it as variables. You can't look at it as some emotional exercise that you are terrified of. You have to look at it as data points. You have to take in your weaknesses, your particular weaknesses. We all have them as traders. And the more aware of them you are, and the more straightforward with yourself you are, you can advance quicker. But just coming out and saying things like combines are rigged, that is complete lies. Like, it's just not true. Out of all the companies out there, Topstep is the one that's working very hard on your success. They've given you bloody risk tools that we don't have in the live. I don't know whether you guys know that, but we don't have any of this stuff. All of this doesn't exist, okay? We don't have analytics on the live servers either. So if anything, once you get to live, you just have the lockout settings, like personal lockout. We don't have number of trade limits. No. We don't have the personal daily loss limit. To get your personal daily loss limit changed, you have to call up Mick, Brett, or Ben and go, guys, can we up my daily loss limit? And they go, no. So yeah. So basically, don't think that combines are playing you in any sort of way. If you can't pass them, like many people in this chat have XFAs. They've passed combines. How come it worked for them? So maybe it's not the combines, maybe it's your skills that are not yet there. Now remember, trading is a very high level skill. It's not, it's kind of like doing surgery, being a detective. It requires skill, specialty, observation, speed of processing your thoughts, and emotional resilience. But also good strategy, okay? If you have a flawed strategy, that's never going to work. Or if you've never had to deal with risk parameters and you're just kicking off trades in your personal account, usually losing money, and then going, oh, markets are a scam. Let's go one step further. It's now not Topstep. Oh, now the markets are a scam. Markets are rigged. Where does it end? Is life rigged? Well, maybe. We could be living in a simulation. We can go down that rabbit hole very easily, right? So what's rigged? Everything's rigged, right? Markets are rigged. We're rigged. Everything's rigged. Try to have a more humble stance rather than, the multi-million company that has been around for 14 years is rigging the combines. No, maybe it's the matter of, hold on a minute, I'm probably not good enough yet. Yet being the operative word. So don't give up. Just go, on this attempt, I wasn't successful. What did I do wrong? That is called the Kolb's experiential learning cycle. Let me hit you with some neuroscience. So what do? You basically go do something. In this case, you do, a trade. It doesn't work. You need to take apart that trade. Why didn't it work? Could you have gone, let's take apart my trade here. So I entered into an initial balance breakout. Could I have entered at London value low as a better trade location? Yes. but I didn't. So now what? Well, I was expecting that it is going to test value at some point. However, I wanted to do a trade to show it. And I was like, well, if it goes, I want to be in on it. To me, I would rather be in a slight drawdown on the trade than miss the trade altogether. To me, it's much worse to miss a trade altogether than to actually outright lose a trade. But that's just me. Maybe, maybe I'm different. So yeah, now we're back at value low. Okay. So it's like I could take the stance of actually cutting some and readjusting my average. That's something that you can also do. So let's maybe play around with this. Let's try and do that. So you go, we were selling it. So let's go buy, and then readjust another 4. So now you're down to 39 ticks, right? And then if this works out, I still keep my original target, which would be somewhere down here. And if that works out, you are looking at about 5 grand, right, on this sort of positioning. So 7 lots, 160 ticks, 170 ticks. So those are the kind of things that I will do in my big accounts that are very, very sizable. So I don't feel comfortable doing that in prop accounts on the position sizes and risk controls. So this wouldn't be the right way for me to pass combines. Not to say that I haven't passed them this way, but generally I stick to up to 5 lots. I try not to go above 5 lots because it's just too much risk. Too much risk, and you would have to mess around with things a lot. All right, so we're getting that overlap now. This is the effect of the overlap. Everything's going to start going a bit nuts, and I'm probably going to bail out of this altogether because this was just like an example trade, not a real trade. And we're breaking down through the value low. I'm not going to be trading in the live account until much, much later, maybe even give it a couple of days until I recover a little bit. But that would be the way to do it. So you have a trade idea, you have a disaster stop, and then you add into it. Very important point. So you're not adding into it as it goes against you. It goes against you, then it consolidates, goes in your favor. You add. If it continues, great. If it then draws down again, you need to have that turnaround to your side again before you enter, okay? Otherwise, all you're going to be doing is just, DCAing like a lunatic without price action justifying that. So once I get the price action that I don't like, I will actually kill the trade early. So I don't have any emotions in regards to killing a trade. So let me remind you again. I have a long-standing, like over a decade's worth accuracy of 43%. Okay, so most trades that I do, especially out of hours, I will lose about 60% of them. Okay, but once I get them, I get 2 to 3 R, which brings my profit factor to about 1.7 up to 2.3, depends on what I'm trading and how the period went. But overall, those are the numbers that you see me do. So it's 60% of trades I lose, but I go for a larger risk rewards, so doubles and triples. However, sometimes if we're in a range-bound day, I will do singles as well. So that will maybe bump up my average if we're in a particular range bound period, like a summertime or something. Then you will see me do a lot more sort of scalpy type trades, just kind of taking trade from one side to the middle, taking the trade from another side to the middle. And typically on those kind of days, I will trade more. So I will do like 3 to 5 trades. Whereas on most other days, I will stick to 1 to 3 trades. So keep those stats in mind when you're joining the London session. So 60% of the trades that I do, I will lose. But the ones that I get, they are pretty big and smashing. So yeah. What's the formation called again? So we have consolidation with an engulfing finisher. That's my term. And you can have the accumulation or distribution. Yeah, that was a question from a while back. All right, so let me see some more questions here. Do you think equities will close the gap today? If I had a crystal ball and if I was a core equities trader, maybe I could I could answer that question. But here we go. Let's do some stats. So I didn't even look at much of the equities today. I'm assuming you're talking about the gap from the weekend. I mean, it's not beyond the realm of possibility because we're not that far from it. It's possible. So let's just say that closing gaps to the upside in equities would be a pretty good strategy. But looking for gap closes to the downside in equities, that to me would be a low probability strategy. Purely because equities have an upside bias, and that's been enforced for like 40 years. So I've been alive for 44 years. So basically, equities have been going up for as long as I've been alive, which is quite a long time. So yeah. Okay, some more questions. Jesse James says, good morning, Dee. Long time no see. Nice new look. How is your trading post-Trump thus far? Up until yesterday, it was great. I think I was actually on a bit of a streak, so a good streak, of kind of just doing singles and doubles on most days. And yeah, I mean, I didn't really notice much change. I'm not an equities trader as a core equities trader. I do trade DAX, but Germans largely don't really care much about what Trump is saying. I think the most impact we're going to be seeing is on the equities market. Crude oil did smash down a little bit, but it seems to be, if anything, I seem to be recognizing a little bit of old style behavior in crude oil. I don't know whether we're going to get the volatility that we used to have. Like Coach Hoop and I are always like joking in the chat. It's like, where did they go? Crude oil traders, come back. Because we used to trade crude oil. Both of us were big crude oil traders. And now we had to move to like other markets. And that's never very comfortable. Because I always have like a few markets exactly for this purpose. When one of them dries up, I will move somewhere else. And it happened to me in Forex in 2012. That's how I came to futures. So basically, I was trading euro dollar. We had the austerity measures, and everything died as soon as the interest rates went down to like 0.25 or something. And then I spent a year trying to make it work. And by then I traded 5 years profitably. Like I built up $2,000 up to about £250,000, which at that point was like close to like $500,000 over the 5-year period. So, that kind of gives you an idea of my risk tolerance. I don't rush. I just, in order for me to get to 6 figures from a very small amount, I'm looking at 4 to 5 years. So, if you want more, I will put like $100,000 or $250,000, which is something we did 10 years ago. And now it's a massive account. So, it's down to your risk appetite. But basically, are we going to see crude oil coming back? I don't know, but I've had really horrible experiences of products drying up and then not coming back for 10 years. Right? So this is why I spent like 9 months on crude oil last year, gave it a good go. And I was just like, this is not what I want to see from my product. I don't want to enter a trade and then wait for like 3 hours until it makes a 10-tick move and keep checking my internet to see whether anything's actually open and moving, or whether somebody just cut my connection. That's how slow crude oil was. Like we would get to my prime time of day, which is the euro close, when we're supposed to get that failed auction. So it would fail the auction and then just die a death. And I was like, come on, move. And that kept happening. And then we started trending in Asia. So I would be asleep. I'm not going to sacrifice my sleep in order to trade an Asian crude oil move. That's crazy. I'm willing to do that for Nikkei every 2 months, but not every day. I like my sleep. I do these in the morning. I have to walk the dogs. I've got things to do during the day. And, being a night owl used to be my thing, but I'm not a musician anymore. I left that career back in 2013, and I don't really want to look back to staying up all night to do extra work. So, I want to have my 2 to 3 hours per day when I focus on trading, whether that's split between London and then, a bit of NYMEX session, doesn't matter. But yeah, I don't like to trade more than 3 hours per day. So yeah, my trading pretty much the same. So, it's singles and doubles nearly every day. Daily loss limit once a month, which we had on cue yesterday. And yeah, now we push into February, so let's see how it goes. But yeah, for me, I don't notice much difference. Do you have a particular time of day to take trades? Okay, so the particular time of day, yes. It will vary depending on what I'm trading. So if I'm trading DAX, that will be between 11 a.m., so in about 5 minutes time, all the way up to 1 p.m. So 2-hour segment for me to try and find the DAX trade. If I don't find the DAX trade, there is no DAX trading for that day. So if we're not at a good level, or if we don't, if we don't have anything happening that's interesting or high probability, right now it's breaking out. But unless we go back to either 21,500 or even Globac's VWAP at 465. This area is actually, for me, an area for potential shorts, but it's an equity index. So if we maintain past this area with no wicks, no selling wicks, I might try running a long and then leaving it alone, right? These GEX levels are from the other day. But yeah, so the ADR is still all the way up at 643. So we still have over 100 ticks here. And if the call buying continues, then obviously it's going to continue going up. But I still need a little bit of a pullback. I don't get it. There is no setup. Very simple. Now for crude oil and gold and RBOB. For gold, I have just one part of the day, and that is after my 3 p.m., usually closer to Euro close, around 4:30 p.m. my time. That is 10:30 Central, if you're over on the other side of the world. And crude oil, I have 2 times a day, so this is not it. Okay, so crude oil and RBOB, I like to trade usually in the last half hour of the session these days. So I will sit out most of the day, and then I will come to the end, and I will look for a setup. If there is one, I take it. If there isn't one, again, I won't trade it. But because I trade multiple products, I'm usually able to find at least a couple of trades a day. CC did it, says, what are the failed auctions? I don't comprehend any of that. Where do I get more info? Well, you have Dalton coming on, but you have his books, you have my books, you have various courses on it. Even I've done courses on the market profile. It's to do with looking at the first hour of regular trading hours. So you find the high, you find the low. Once the first hour is done, that becomes your reference point. You don't do anything yet, okay? You wait until the price extends outside of that, and then wait to see whether they hold above it, below it, or they try to wick outside of it and come back inside it to close a 30-minute time frame back into the range. Technically, that's the most basic definition of the failed auction. But there's more to it. If you've had a stair step, like for example, we kind of have a failed auction now in crude oil, but I'm not taking that. Why? Because of the price action that preceded it. So what is the price action? Stair step formation, making supplies. It's not what I want to see. I want to see a clean drop. Like if I want to do a failed auction, let's imagine for, just educational purposes that this was your initial balance, right? It wasn't. This is, later on in the day, but I'm just, illustrating to tell you what the setup should be. So that's the high, that's the low. It comes outside of it. This is a 30-minute time frame, right? They try to go outside it. Now, some people will be trying to fish for momentum trades, which is what I tried to do in RBOB today. Not necessarily the best choice, especially when we fell that deep. But more importantly, once we come back in, there is no resistance areas on the way back up. So a failed auction is when they try to find business outside of the first hour of regular trading hours, whatever that session is. There's multiples. And then we start to see a rotation back through it. Sometimes they only go halfway. A lot of the times they will go at least 3/4, and sometimes a full rotation and actually smashing it back the other way, which is then called the neutral day type. Okay, there's a setup there as well. So it's like a whole concept of situational awareness. It's not necessarily going to tell you, oh yeah, definitely this is a buy, because this situation and this situation today, same product, same event, exiting outside of the initial balance, coming back to close a 30-minute time frame, but both would be very different things. Why? This one doesn't have any resistances. This one, whole bunch of things on the way through to the rotation. That will slow things down. I don't want to see that. So that is not a quality setup. So if anything, I want to see this go back down. If it doesn't, it doesn't. It's fine. But I'm not getting involved to the other side where I know there's like a lot of problems with it. So yeah, it takes time to get the true power of the profile. And in fact, it probably took me about 2 years before I learned to read all of it quite confidently. It's kind of like learning a new language. Okay, so it's not easy. It's one of those things where, you know, you're overwhelmed. You know, you're trying to come up with the new vocabulary and you're like, trying to remember all that. And then marrying all of this with good trading decisions, it takes time, right? So it's literally like, if you're going to dive into it, it's very useful. It's the best thing I've done for myself intraday. Not very useful for swings, I will be honest. Supply and demand and, you know, looking at swing extremes and my cue points, that's a lot more useful. But generally, it's one of those intraday lenses into the market behavior that otherwise you wouldn't necessarily be aware of. And it just displays it in a very, very simple histogram, which, you know, we, as a Blatek company, we have built like this, with a visual graphic representation of the initial balance in red, any extensions in blue. And then you can clearly see when it's failing the auction. I even have the initial balance size, which is pitiful, 42. It will even tell you the value acceptance trade and special situations of that sort. But yeah, it's all very visual. So if you enjoy that, yeah. CC did it also says you trade the DAX on futures. Yes, it's called the Eurex exchange, which Topstep still doesn't have, but other brokerages, you can pay for it just like any other data, and then you get it. I think TraderRate has it on certain prop firms, but it's a rarity. So yeah. Sorry, was that the first hour of the trading session? Yeah. So for London, depends on where you are in the world, but I'm going to use GMT. So for London, that would be 8 a.m. till 9 a.m. And then if you are trading equities in GMT, that will be start time 2:30 p.m. up to 3:30 p.m. GMT. Crude oil and gold have their own slight different times, and you can find those if you search for open outcry pits. I did have a file that had like a joking thing on why crude oil dead and per hour, and I seem to have lost that. So maybe I'll repost that on Twitter, because what I did, I made a very simple table of just when some of the major products are opening and closing. But you know, from the open, you just take the hour and you actually get the initial balance. So yeah. All right, guys. I think that's all for today. I'm gonna go and rest and just, you know, take some more pain meds, probably. Yeah, Paul says, I have a crystal ball, it just makes the charts look upside down and distorted. Oh, God. Oh, Paul, you're very funny. I like your jokes. Have you ever tried to build your own trading bot? Well, I have a whole company, man. We have the, you know, algorithms. At the moment, we have 2 algorithms that are licensed to firms. We don't do AI bots because AI is just an aggregate of whatever else is out there. So we use my models for that. But I'm not the one doing all the coding because it's way above my head. I know my place in the world as a coder. I'm okay with utilities, but anything apart from that, I'm just like, meh. But I'm very good at analyzing data, right? I'm a total nerd when it comes to looking at the numbers and finding patterns that other people don't seem to see them. So yeah, I have an entire business based on algorithms that are licensed to other firms via this, like, I suppose it's sort of like signals, but it's not really signals. Like, you actually license the entire code and they pay a pretty hefty sum for that. And it's licensed on a month-per-month basis because if the algorithm breaks down or we don't maintain it properly, they are just going to say, okay, not interested. So it's a very faceless transaction, very, suitable for us who are more kind of, especially my team, they're pretty camera averse. Let's put it that way. But yeah, we have a couple of them that are running. I think one of them is the ADR reversal. So obviously we have some conditions that are proprietary over there, which I did put in the Market Stalkers program, but obviously coding bots is very different than manual trading. And we also have a swing trading algorithm that runs on crude oil. So that has been in operation. Strangely enough, that wasn't that profitable up until last year. And then suddenly it started doing really well, probably because it's catching those overnight sessions and stuff. And every time I looked at what it was doing, it was already in. So I was like, well, great. Now I'm like 100 ticks away from the entry. And every time I tried to kind of piggyback on that, it just didn't work. So you have to have the trading, location, and then the stop sizes are much bigger. The algorithm uses 170 ticks for a stop. That's a bit too big for a proper count. And then it has an expectancy of 2 to 5 days per swing. So, very, very different way. But yes, we have a company that deals with algorithms. And we've had our setbacks as well. So initially we had a co-integration basket of different Forex pairs. That ran really well for 2 years. And then it just badly broke down in 2015. So, it's ups and downs. You always have to maintain the algorithms. You have to make sure that they are optimized properly, but not over-optimized, because that's a common issue with algos. But yeah, so that is one of the things that I do outside of this. Oscar says it seems short structure in CL. It's short structure all morning, which is why I was shorting RBOB, but it just didn't give us the move yet. Maybe it will, maybe it won't, but for now, I'm gonna say enjoy the rest of the broadcast. Later today, I hear they are going live a little bit earlier. They're trying something new to extend the broadcast. I'm going to be on Lunchbox Trading today. I believe we have Brett Steenbarger coming, Dr. Steenbarger. Always great watch, very good to see him again. And let me find my plugs here. So we're going to have the VIP draft for my team tomorrow. But yeah, if you're not in Discord, we actually have over 100,000 people in there. And very soon I'm going to be doing the dedicated coach room that, presumably I'll have in Discord. So we'll see how all of that works. I'm sure, it's fairly straightforward. I've done Discord as a guest before, but never actually running it myself. But, it's just another streaming service, so it should be okay. But yeah, check out Discord, whether you are looking for more questions or you want to hang out with other traders, that's where it's at. You can even find our ambassadors that will gladly help you with any issues that you might have. Now, if you want to come and trade live with us, do a little bit of banter as well. We're looking for traders to come on TopstepTV and to share your story. It doesn't matter whether you are on the big board or you're just starting your journey. If you are not camera averse, then fill out this form, and we'll have a look at it, get back to you, and we'll probably see you live on Topstep TV at some point. Anyways, guys, thank you so much for all your questions. Again, amazing questions. We're finally getting that move that I was looking for, that I killed early. So that's a bit annoying. But yeah, it is the overlap. That is the expected thing. So perhaps I should maybe do that. But again, it's just a combine. I'm not going to be trading it live. So I'll see you later. Thank you for being here. This has been the London session on Topstep TV. I'm Marcus Dee, aka Deeyana Angelo, and I will see you in a while. Take care.